All right, folks, now it's my privilege to honor Joe Ryan from Wings Insurance.
All right. Can everybody hear me all right? Perfect. Okay. Well, it's a privilege to be here. Thank you so much. John and Martha, of course, Brian. Um, Before I get started, I wanted to mention something from yesterday that John and Martha said in the entrepreneurship talk yesterday morning, which I thought was really interesting, and that was passion. Having a passion for your business um, is the key ingredient to success. And you guys talked a little bit about, obviously, the auto side of things that you guys worked on. But that really struck me, was having that passion and that difference, um, and especially in aviation here. And to me, that passion is that spark that gets you up in the morning, um, and an attitude. It's an intangible, but an attitude, right? Somebody with a really good attitude who's willing to put in the time and the effort. Um, so, wonderful. Thank you for that. So, let's see, is this thing going to work? There we go. All right, so why are we here? Why am I here? Um,
Mark 301 Plus. Just crashed by here, and I need some help.
so that was an incident that happened. That's the live ATC recording of a pilot that had an issue. He was all right. That's the most important part. But what's funny is it's probably 30 minutes later that we got the call to our 24/7 claims line that somebody on our team manages. And it struck us that this is the reason that we exist. It's to help. And typically what happens is we are the second call when something happens. So first it's a loved one, or if it's a business, right? You follow your RP, and then we are called, and we get the call. And it can be 2 a.m., 3 a.m., right? So there's no, things don't happen at in normal business hours, typically. So just really briefly about who we are. Based out of Minnesota, out of the Twin Cities, KFCM, Flying Cloud, Eden Prairie, Minnesota. So we own a 2016 SR22 that we fly for company business. Many of us are ATPs, CFI, CFIIs, former chief flight instructors. We've got a number of those on staff. 47 employees now, and several large flight schools as well. So we handle anything instruction, rental, dual instruction, 150 plus aircraft, seaplane, dual instruction, instruction rental, rotor, piston, etc. So least important slide up here, but just a little bit about me. Let me talk about myself here for a second. So I was a UND grad, Grand Forks, North Dakota. Then became a chief flight instructor out in Las Vegas for a Cirrus Op, and did that for a while on the West Coast. And then from there, I went to SkyWest Airlines, and then came to Wings Insurance. They brought me in a number of years after I worked for SkyWest. So it was Minneapolis-based at SkyWest on the Sierra J. And when it was working, it was a great airplane. So I just want to touch a little bit here on the state of where things are in the market. And I think this is really valuable. So right now, we are in what's called a hard insurance market. Year 5, this is the 5th year. And this graph, I wanted to put this up here because this graph was a study that was done by the U.S. General Aviation underwriting firms. And these numbers that you see here are negative, they're losses for the U.S. General Aviation market. the underwriting firms, and it only deals with Part 91, Part 135. So no Boeing 737 MAX in here. You won't see those numbers. But what you can see is that from 2014, 2015 to 2020, the general aviation market lost, the underwriting market lost money. And part of that, I'm just going to throw these up here. So part of that, when they looked at this study, they saw that between 2010 and 2020, the first 5 years, 2010, 2015, and then 2015, 2020, the claims stayed the same. The number of claims were the exact same. What happened was that between 15 and 20, the claim prices doubled. So part of what they looked at was why, and what they found was it was the higher value of aircraft, so values increased quite a bit. They also found that parts were more expensive, maintenance was more expensive, and so they also found that liability claims increased. What used to be a $2 to $3 million liability claim for a fatality now ended up being about $4 to $6 million. And some of those numbers are a little bit skewed by some things you guys might be familiar with. So the Kobe Bryant accident that was high profile. There were some other charter incidents that were high profile that had fatalities, and so those end up in the news, so those are the ones we hear about. Natural disasters. In 2017, there was something like 31 individual billion-dollar claims in natural disasters. And why that matters to you is that through reinsurance, so your underwriting firms, right, they have insurance. It's called reinsurance. And those reinsurance firms actually insure your regular P&C line underwriters. And so your rates are actually affected by natural disasters as well, because the reinsurance rates go up for your underwriters, and part of that is passed on to you guys in your policies. So that's why that matters. So a couple of things that are next. It's not all doom and gloom. So Russia right now, we've got the grounding of the jets in Russia. This one has not been paid. So this is a claim that's sitting there that has not been paid yet, and they're estimating 11 to 19 billion, but it has not been paid. So for reference, the 9/11 attacks were 9 billion. That's what was paid out there. That was back a number of years ago. 737 has not fully been paid out either. They're estimating about 3.5 billion for that claim. So those are going to hit the market at some point. However, there are several new markets, right, which is a good thing. So we're in a hard insurance market. It's year 5. Typically what happens is the market shifts every 5 years between hard and a soft market. That's very common in the insurance world. Just like in the finance world, right, the market bull and bear, about every 8. The rule of thumb in insurance is 5. So we're on the edge here, and what we're seeing is 4 new markets enter in the last 12 months. That's what we need to see to get back to a soft market. Get back to where we were 2013 and 14. So that's good news. That's positive news. It's probably going to take another year or year and a half to see kind of us right in the middle of a soft market. It's not going to happen overnight. It never does. But those are some good signs. Okay, mayhem. So I touched a little bit on these big claims, right? These ones that are in the news, that everybody knows about. Those are not the claims that actually affect your premiums as much as the small claims, the ones we don't hear about. So I kind of liken it to going to Costco. We'll all go to Costco, spend $500, right? We'll get a fridge and 1,000 AA batteries, whoever needs that. You spend $500. But then you're like, wow, this is a huge bill. But then you go to breakfast and you get a coffee. You know, you go to lunch maybe. Maybe you get a snack on the way home, right? And at the end of the week or at the end of the month, you look at your bank account and you're like, well, it was only like $11 here. It was only like 14 bucks here, and you realize you spent like 700 bucks. So these are some of the claims that really hit underwriting hard. They're frequent. So this is a prop strike. And you can see that it's a pretty small, the ruler's up there for size, so pretty small prop strike there. Tow bar claim, one of the most common claims, especially in the training environment. This one was 50 grand, $50,000 claim. Hanger rash, another big one. So this is a hangar where the hangar door, the pilot thought he knew how high the tail was, and so he only put the door up a certain amount of what he thought the tail would fit. He'd done it a million times. He put the door up 3/4 of the way and hit the tail. $7,000 here is this claim. In the training environment, some of you have hangars, some of you don't. But very important, if you do have hangars, to make sure there's a regimented procedure, right? For every single person that can pull that aircraft in and out of the hangar. CFIs, management team, renters, students, right? Is it documented and regimented so that these things don't happen? Right? Again, tow bar procedures from the last one is if it's moving, it's on. If it isn't, it's off. Or whatever works for you guys, right? But making sure it's easy things to forget that end up being claims over time. And so very important for procedures. I wanted to point this out. So this is another hanger rash. This is a 172, but the reason this is up here is because, especially in a very busy flight school operation, especially if your aircraft are hangared, very often what will happen is you don't want to put that aircraft back in the hangar every single time because you're running student after student after student. And so a lot of times what people will do is they'll park the aircraft outside the hangar and they'll swap students. It's very common. So these are lines that one of our flight schools painted on the ground, and what these do is they give clearance for the hangar door in the back. So even if someone were to put up the door, even by accident, it would not hit the aircraft. So that's another one, right? Little things you can do to improve the safety of the operation, right? Improve your claims. All right, this is another one. This is our Cirrus at an FBO, and they decided to put some cones in front of our spinner there. So we saw this and we said, this is a classic, right? So they'll put one on either side, which is fine, but it's the one in front of the nose that you want to remove. That's huge. Easy to get behind, take a phone call. You're thinking about 17 other things. We're all business owners, right? And you get on the phone, you get a phone call, you're thinking about something else. You get in the aircraft, you start the engine, you taxi forward, pull the cone into the prop. So really making sure there's a procedure. Just don't let this happen. What we did was we just went out there and said, hey, we're just going to move this cone. And we moved it off to the side of the wing. Okay, who's seen the movie Office Space? Yeah. The Bobs. What would you say you do here? All right, so our job is pretty simple. My job is pretty simple. I collect the relevant information, understand the use of your aircraft, your business, right? Send that to underwriting, so market it to the right underwriters at each firm. Negotiate with underwriting, right? And I walk through that with you, a broker walks through that with you, each option, and then we coordinate the policy throughout the year. On the right side, I have what's called a formal market summary. This is something you should get every single year in every single proposal. This is every single underwriter in the market and their response. So this is probably the biggest way you can tell that you have every single option and the best option. It's also a great way for you to tell if you're seeing all of the options and the best options. So this is an actual flight school that was marketed. That's why the premiums are X'd out. Can't share that information. But you can see here every single market, all 19, and their responses. It's actually 18 on this one because there's an underwriter Mach 2, which is not in the market quite yet. They're setting up their reinsurance side of things. All right. How to choose a broker. Right? Most of you know, or you may not, but it's a one broker system, right? So the market works on what's called a one broker system or a broker of record system. So it's important to choose. You have the free choice to choose who you want to work with, right? And so part of that is, how do you do that? You interview them. That's a big reason. Call a bunch, interview them, right? Find out, what do they know about aircraft? What do they know about aviation? Find out what they know about that use. Dual instruction only, instruction and rental, flying club risks, dry leasing, right? What do they know about how to work with the markets and the use that you're actually doing, right? The things you're doing. Market access, do they have every single market? Do they show you every single market? I can tell you I have every single market all day long. Do they have market share? So do they actually do business in that market that you're going into, right? That you have a business in, right? FBOs, flight schools, or is this their first one? And their ability to negotiate, that's big, right? Proving that through the market summary. All right, little Alex Trebek here. I got a little Jeopardy for you guys. A little quiz time. There's no prizes. A pat on the back, a warm, friendly pat on the back. All right. So, should I require all students and renters to carry renter's insurance? So students and renters. What are your guys' thoughts? Yes. Absolutely. Does it matter what type of renter's insurance? Can they just go anywhere, and does that affect your business? So loss of use is a big one, and there's only 2 underwriters right now that offer that. I think it was actually touched on earlier. So that's a big one. So making sure if you have a loss of use, so Star and AIG are the only ones that offer loss of use. If you're gonna use loss of use in your business, which I strongly suggest you do, what you have to consider is, what are the minimums that I'm actually requiring my students and renters to have? If you keep your minimums very low, it doesn't matter if you have loss of use, because you're not going to get much out of it anyway. So having the right amount of non-owned hull coverage, requiring that from your students and renters, so that you can, and then figuring out how long are my aircraft typically down for my typical claims, and that's how much non-owned hull you require. So that's important, right? 5,000, 10,000, 30,000, what do I need, right? Am I making 10,000 a month? When my aircraft goes down, is it down for 2 months? Okay, that's gonna be 20 grand, right? And then they need to pay for the rest. So how much do I need to actually have students carry? So that's important. I've got a couple other ones up here. What happens if I have a claim? Really important. Don't post to social media. That's probably the biggest one. Don't talk to the media, right? So what we do is we do some ERP planning with some of our clients. And so we'll call and we'll pretend we're from like ABC or something. Obviously working with the owners of the flight schools, the chief pilots. And we'll just call one of the instructors. We'll say, hey, we're from ABC. We just heard that an aircraft went down. Can you tell me anything about that? Kind of see what their response is. And so it helps implement a plan for ERP, right? And implementing that with the owners and the chief pilots, making sure everybody's on the same page there. What about when your instructors are teaching someone else in their aircraft? What do you need to require? Is there anything that you need before the instructors can teach? Insurance policy. Yes, yes, right. Yep, so making sure they're a named pilot, yep, or meet the open pilot warranty, that's a big one. There's a couple of provisions that I think are really important, especially for the flight schools, that need to be added as well. Are you guys familiar with additional insured with a waiver of subrogation? So those two should be a staple required before any of your instructors touch a non-owned aircraft. And the reason for that, so additional insured, so your business would be named as the additional insured. Additional insured means that your entity now, your named insured, is protected under the liability of the owner's policy. Waiver of subrogation means that their underwriter waives the right to go after you for claims to the hull. Very, very important. Have an email drawn up anytime somebody comes in and says, hey, I want an IPC, I want a BFR in my aircraft, doesn't matter. Say, hey, no problem, here's an email. I need additional insured, waiver of subrogation, listing our named insured and our address. Send that to me, no problem. As soon as you get the certificate, off you go. So that's important. And I think this was touched on a little bit, W-2 instructors, contract instructors. So I won't jump into that. Again, I think this is really important, and this is not rocket science, this business. It does take passion and detail and attention to that. But how do you know you have the best premium, right? Every single year, ask for a formal market summary. And make sure there's detailed answers. If there is declines, why is there a decline? What is the reason that underwriting declined? Not just a pass, and not just we shopped it everywhere over the phone. So, thank you all so much. Appreciate it. Any questions for me? Yes. Yes. Yeah. So I'm so sorry. Yep. So she asked the liability limits you see here on the market summary. 1 million each occurrence, 100,000 each passenger. So that's typically the baseline for underwriting. So you can see here that there's multiple liability limits offered for this specific flight school. So they offered 1 million without the passenger sublimit. Once you have 1 million, typically you can go to 2, and from there you can add excess if you need to. So very rarely will underwriting, and it happens, typically 4 to 5 million is where the underwriters cap out on flight schools. And then you have to layer excess on top of that. But it just depends on the size of the fleet, very common. So what premium are they getting, right, for the liability limit, right? And what is the need? So is the need contractual? That's much easier. Is the need, we've had a ton of claims on the liability side, and so we need to raise it? That's a different story, right? So each specific situation for the liability side of things is very different. So this person or this business, their needs are probably different than each of your needs, right? So this was just theirs and an example of what a market summary looks like, but it's a good question. Yes. Not impossible. Yeah. Just depends on the size of the fleet. So
I'll ask you my insurance question scenario based, right? So an instructor of ours is in the traffic pattern with a student pilot and has a bird strike. Does the renter's insurance kick in for that event and the loss of use, or because it's dual, is that on a different policy, or is it gray?
So the situation, right, where it's a dual flight with an instructor and a student, The student has renter's insurance, and yep, it is your airplane, covered by you guys, and you're saying, does the non-owned policy cover that for loss of use? So what happens typically is that the loss of use policies, or these renter's insurance policies, are something called secondary. So your insurance for the flight school is called primary. It covers the claim first. It pays first. And then the renter's insurance is secondary. So in this case, yes, the loss of use, yes, that could happen, that it could pay for that under the loss of use. But your policy, you would make a claim on your policy first, and the student would make a claim for loss of use on the renter's side.
In that scenario, can the student say, no, I'm not filing a claim, leave me alone, I was dual? I imagine those sorts of disputes arise.
Yeah, it can happen. Very rarely does that actually happen. In fact, I work with a lot of flight schools, and I've never had that happen where the student says, I'm not filing a claim. That is a very, very rare occurrence. It may happen, and I think you just have to work through that then, but very rarely. Now, if the student doesn't want to file on theirs, file it on yours and let your underwriter go and subrogate then. So go right around the student if you need to, and that's a possibility. But there's a lot of different possibilities there before you go to the nuclear option. So,
Well,
yeah.
they'll also come around because you have the right to refuse service. So, block them from the scheduler. They're going to do what you want.
Well
So-
said.
Joe, I know you mentioned the impact of the Russia and the 773 MAX. What is your opinions of the thought of there should be a separation of 135 and 121 liability versus flight school operations? Now, whether that's realistic to ever occur or not, do you see anything in the future for that as 737s cost more and more, and we're just the little people in the industry.
Yeah, except our piston aircraft just keep costing more and more. It's we bought a PA-28 180 in 2016 for $28,000 in somebody's barn, and we sold it in 2021 for $93,000 with a TBO'd engine and no new avionics. So costs are going up. My thought process on that is I don't disagree. So there's positives and negatives to grouping things and eliminating things from that grouping. So for example, a program or the losses that happen over here, let's say in the airline world, only affect the premiums of the airline world. And the losses that happen in the flight school side, their premiums and their losses only affect you guys. The reality of it is, in aviation insurance, we're not dealing with law of large numbers. That's what insurance is based on. And with 290,000 GA aircraft, you just can't do it. You can't use the law of large numbers. So you have to group everything together to try to get a premium that makes sense. And a lot of times it doesn't even make sense. You look at some of the premiums and you look at what possible losses that could be paid out, it doesn't make any sense. But they're trying to reduce the premium and charge it over here, right? So everybody is connected. And I think ultimately I agree with you. I think some segments could be grouped, but I see no push from underwriting to do that. In fact, the opposite. So.
Any other questions? Great. Thank you, Joe.
Thank you so much.